Good morning, guys, and welcome to Blockchain Banter Trading Crypto. I'm Jen. I am here with my wonderful guests. We have Keith Allen, TA and algo trader, order book analyst, and co-founder of Material Indicators, along with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Thank you guys always for joining me on Tuesdays. We're off to a good start. I remembered our countdown. So hopefully we are smooth sailing from here on out. I am, first of all, I want to, if anybody hasn't caught any of our calls, definitely give our speakers a follow. I've started doing some clips and things because I know sometimes, an hour can be a lot, but I've started taking some little bits and pieces and some highlights and kind of doing summary blogs and posting those along with actual video clips to my X account. If you haven't caught them, definitely give them a look because like last week, Keith, what we were saying, what I wanted to highlight from our call is the actual liquidity. And I think one of the things, and I didn't clip it, but what you said that really stuck with me last week was if you can see it, you can trade it. And I thought that was a really it was a solid point that I wanted to highlight, especially because we're giving all of these insights into trading and how to see these certain things that can get you ahead. And Mark, I have to give you props too, because the gold versus Bitcoin, I actually turned that into a blog to highlight that because I don't think a lot of people even realize that. Somebody commented on my X post saying, has anybody actually charted this and looked at this the way that you guys kind of were? And maybe Ben Cohen will do it on his next show. And I was like, that would be very cool. We love Ben Cohen.
Turns out the Trump administration is looking at that too.
Well, thanks to you, Mark. We appreciate that. Anyway, so what are you guys seeing? What are you guys seeing this week? Anything standing out at you, whether it's the fire charts or the indicators, or Mark, any interesting strategies that you might be looking at that maybe some of us haven't, noticed for ourselves?
Keith, would you like to go first? I think fire charts was the
okay.
first
So I want to expand on something that Jen led with, and last week when I talked about if you can see it, you can trade it, and sometimes you see it and you can trade it, and sometimes you see it and you go, I don't want to trade it, right? So it's not, and when the market is uncertain, it's not really about making money every day. It's priority one is not losing money, right? The key to making money and longevity in this game is to not lose money. So that's really should be the root of your strategy, is not losing money, and then making money comes along with that, right? And so and I'm going to apologize in advance because we have a power outage in the neighborhood, so I'm down to one screen on battery on my laptop and no big monitors. So
not ideal for a trader.
Not ideal for me and my eyes who like to look at big screens. But let's start because there's something. Well, I'll roll it back to Friday when we did see. Last week we were talking about that liquidity moving, and I tagged the entity as Spoofy the Whale, and in perfect clarification, or to clarify, I should say, last year apparently I named an entity, Spoofy the Whale, that was doing the same thing, and that was published in Cointelegraph, and so I
remember this one.
I don't know. Well, they published it again, but I don't know that it's necessarily the same entity, but they're playing the same game. Okay. It may or may not be the same entity. I have no way of proving that, but they're playing the same game. And that game is something I call liquidity herding. And if I can share the screen here, I'll show you that. And hopefully this doesn't feed back on a loop on me when I first start out, because I've got our live stream thing up. Oh, you know what? Maybe this would be better if I share individual windows. Let me try it as the entire screen as I normally do, and we'll go from there.
Okay.
And I'll just quickly get out of this. So let's start here. Are you seeing my screen? Because I can't see. I'm down to one screen now, so I can't see if you're seeing it. Are you seeing fire charts now?
We can see fire charts. Yes.
Okay. So let me start by zooming out a bit, and you can see all of these blocks. Let me turn off the tag tool. You can see all of these blocks of ask liquidity moving, right? And these are sizable blocks. These are 89 million, it's basically 91, it's the same size. They're large. Those are sizable. This one's 103. Now, and people go, "Oh, that's not a lot of liquidity." Relatively speaking, compressed into one level on one exchange, this is significant. And it's not frequently that we see this kind of liquidity stacked in one spot. And as you can see, in most cases, price moves away from that. These guys are not, in this instance, chasing price. They're pushing price. And possibly they were doing this to protect shorts. Possibly they were doing this to get bids filled down here. Whatever the case, you can see they push it down. There was a fill. They start raising up and price moves up with it. And after this was done 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times, you would think the market is going to get numb to this. And on Friday, the market did get numb to it, right? Because we had Fed Chair Powell in here somewhere. I think it was on the 17th. And there was some discussion about the strength of the economy, recessionary fears, inflationary fears around tariffs, et cetera, et cetera. And he basically said, the economy is still strong, and there is going to be some issue from tariffs, but we don't really know what it is because we don't really know what the tariffs are going to end up being. And so the market initially pumped on the news briefly, and then obviously we saw things starting to come down. Now, when Spoofy started raising asks higher, historically, that's when we see price move up with it. But over the weekend, it didn't really do that. In fact, we just kind of chopped in the range. Now, the fact that it was the weekend, means it's typically a lower volume situation, and we didn't really have any reaction to this until the Sunday close. And you have to wonder, did the market forget that this was a game and potentially opening the door for a bull trap, or did something change? Well, sometime over the weekend, and I'm not going to jump around to show you the post on X because I don't want to lose screens, but the Trump administration announced that one way that they could acquire more Bitcoin, because remember, we heard at their recent crypto summit or digital asset summit that they want to acquire as much Bitcoin as possible. They never really spelled out how they were going to do that. The key takeaways from that were they want to acquire as much as possible, A, and B, at no expense to the taxpayer. So what's a way to do that? One way to do that is to potentially sell some of the gold reserves. Now, had something like that been stated when they had those summits and made those announcements, the market probably would have responded a lot better to those events than they did, because the last one was a nothing burger. It was just a regurgitation of the same news. So over the weekend, it was announced that they could do that. Now, again, this is pretty much hot air. They said that it's a way they could do it, but they didn't say that they are doing it or are going to do it. Whatever the case, gold is at an all-time high or in that range, and Bitcoin is at a dip. Might be a good opportunity to exercise something like that. Mark, are you possibly under an air raid right now? It's
I can hear it too, but it's coming from my speakers. Is that it must be from Jen. Jen, is there someone using power tools near you?
Landscaper.
Okay. All right.
Okay.
Well,
I'm
just stay away.
muted.
Listen, stay away from the wood chipper.
Thank you, Keith.
So I'm concerned. So we did start to see some appreciation here, but why did we stall out? Well, let's go ahead and look at the charts and see if any of this had something to do with it. If we look at the candle chart here now, first of all, we had that's not what I wanted to do. We had a death cross. You know how I like to talk about those death crosses and golden crosses. We had a death cross between the 21 and the 200-day moving averages. These are simple moving averages. This is typically when you expect to see price go down, but price went up. Why did price go up? Well, this was right at the Sunday close. We talked about that pump coming off of potentially the, maybe that news about using gold to buy Bitcoin possibly having an influence, but the market didn't respond immediately to that news. So I don't really think that was it. But after a little bit more investigation, if we flip on the EMAs, the exponential moving averages, we notice a golden cross in this same area, right? And I personally like using the SMAs for the way that I like to trade. But as you can see, I also have EMAs on my chart as a point of reference. I think most people trade EMAs, and that's why we're seeing some price appreciation off of this golden cross, where the death cross here is kind of canceled out. So when you have conflicting information like this, how do you trade it? Becomes kind of challenging, right? So what else can we look at? Well, I think that, and we had a rejection here from the 50-day moving average. So is it a moving average based resistance and support right now? Because we have conflicting data between the two moving averages, it's kind of difficult to trade on that data point. So I zoom out a bit, and when I zoom out, a couple things are readily apparent to me. Whether it's the EMA or the SMA, these levels have to hold. Support needs to, if support doesn't hold here, then we go back and we retest this trend line and potentially make it down to this 75, 76K range, which was an area of prior consolidation. We talked about 69, and I don't know that 69 is really going to come into play right now, and I'll speak to that in a second. So will we get this retest down here? Potentially. It's really a range game between the trend line. If we lose the trend line down to the 76K range, but we had this area of prior consolidation that we've only spent a short time in. At the beginning, right? This was the November election Trump pump that began here. We consolidated here very, very briefly, flipped it. RS flipped that 91.6K range. Thought that was pretty solid until we had the breakdown. Retested, broke down again, broke through it. So we haven't had much consolidation in this lower range, I would say. And so we could conceivably consolidate in this range. To me, it doesn't really matter. This is all kind of intra-month, intra-quarter volatility and noise until one of two things happens. We break down here and go test support here, or we break above the 2025 open, and this is the bullish case here. For anything meaningful to happen, and by anything meaningful, I mean for us to have a chance to get back to all-time high territory, we need a sustainable RS flip, that's a resistance and support flip, at 2025, at the 2025 open. Right now, it is resistance, but we haven't even gotten to it yet. So it's serving as resistance right now, and until we can flip that, that's going to be our glass ceiling. Now, do we? One of the discussions in our Telegram group this morning or yesterday was, is this? How do we know if we're just in a correction, a deep correction in a bull trend, or if this is indeed a bearish downtrend that is going to continue into a bear market? Well, if you guys recall, I have that one little secret metric of mine that I really, really like, and it has not failed me so far, and that is the weekly RSI for Bitcoin. This is not the same on every coin. You might find this works on certain coins. You might find different coins have different levels, but for me, it's right here. and that is this. I've got it at, I've run it at 41. I've run it at 42. I split the difference at 41.5 on the weekly RSI. And if you look at the times that price has broken down from this level, that has been our greatest breakdowns, and really our last confirmation that it's a bear market. And you can see here, we've approached that a couple of times on these recent tests, but we've not broken it. So in my opinion, this is still a bull market. The trend, of course, is intact. That's the first thing, right? The trend line is intact. And the RSI is intact. This level right here happens to correlate with that 75, 76K range that we discussed. So if we were to lose that level on the RSI, it would mean a breakdown past this line here, past this consolidation, and then we have to wonder if the bear is in control. Now, if that happens, I would want to, if we did break this, I would not panic and rush into it, right? Thinking that, okay, the bear is here, sell everything. I would wait patiently. And this is the hardest thing to do in trading, is to practice that patience and discipline and wait patiently for a weekly close below that level before I was confident in what was happening. The other thing I would do relative to that is I would be looking to see where liquidity is stacked. And as you can see right now, we have bid liquidity stacked exactly at that level. So this correlates with what I just showed you on the candle chart, and this is what I'm watching. We don't see anything here that says, "Hey, this is going to dominate one way or the other," until we get up here, until we get up into this big block of ask liquidity from Spoofy the Whale. And there's a secondary block here, by the way, of another 46 million. And this is here to pretty much insulate what's above. So if this were to get hit, if a wick comes flying through this and it were to get hit, they would take profits here, but they would not lose the lion's share of what they have stacked here. Now, the problem with this is you can't trust it. And I would expect that if price gets close, it will either roof pull or move. And so, it's been here for a few days. You see how briefly some of these were there for less than a day. Some of them were there for several days. This one's been there longer than the others. It lasted through the weekend, started on Friday. We're now on Tuesday. And so I'm expecting this to move sometime soon. Is it going to move higher and draw more longs in, or is it going to move lower and push us back down to retest support? That's the game that's being played. You'll also notice on the order flow side, the big mega whales have been buying a little bit, but this isn't huge volume, by the way. This looks like a lot, but it's really relative to what they've spent in this time frame. And to get a metric on exactly what that is, we'll switch over to the absolute CVD, and we go down here and we see at the bottom right, you see $1 million to $10 million orders. That's the brown whales. Let me show you the key to that, by the way, if I can. Okay, so here's the key to what's down there. Brown mega whales are those larger $1 million to $10 million orders. We usually see them in the $1 to $3 million range in each order, and they do them so infrequently. That's why they look like that's why they're so easy to spot, right? Like stairs, because it happens infrequently. Versus all of the other order classes that trade much more frequently. And so, if we look at what this is in terms of how much, what's the net of buying and selling of that order class since in the last 7 days, you can see we started at 0 for all of them. And the net for those brown mega whales is only $17 million. So that's not a lot. Whereas you see that some of the other order classes, the purple whales have sold 118 million, green 441 million. And so, red is 441 million. and green 24 million. Well, green was actually T-whopping yesterday. And that was, you wonder sometimes, is that an accumulation strategy or is it just a short-term trade? And it looks like they did it here as a short-term trade, and they made some money on that trade. So this is why I think it's so valuable. All right. So look at this right now. See how this support has disappeared below? Actually, some of it may have moved up a little bit. So we'll see what happens if this is going to be enough to hold and elevate price. All right. Yeah, it does actually look like some of the support moved up. So trying to push into this deeper pocket of liquidity at 89 million. We'll see what happens. But you can see liquidity stacking above here. It's going to be hard to cut through this because there's so much above, and the path of least resistance at the moment is to the downside.
I want to talk, but because it's so loud here in the background, I'm going to make it brief. Keith, can we quickly just revisit when we're looking at the different classes and what their moves are? We see the brown is doing one, and we spoke about this before, that sometimes the smaller moves, the smaller classes, are the browns kind of maybe being broken down, right, into smaller orders.
So
you see them doing opposite of each other. Does that happen often?
Yes, the smaller order classes often counter trade the larger order classes. Historically, purple has had the most influence over Bitcoin's long-term trend. There are periods where we see other classes dominate, like when the ETFs were launching, we saw the red order class doing a lot. So that does change over time. This was kind of the ramp up on ETFs here, right? But historically, purple has had the most influence, and you can see they've distributed quite a bit since we topped out around 110. But as you were saying, brown's doing something different. Well, the thing to always remember, when we first started doing this and looking at the bin CVD, it was pretty easy to tell that yellow was retail. Obviously, yellow lives in retail. I mean, retail lives in that yellow class, or orange, whatever you want to call it. But retail cannot hide in the whale classes because they don't have the resources to do so. So you always need to remember that whales can disguise themselves as smaller order classes, and they often do, and they do so for two reasons. One, in thin order books, they can't make those big giant orders without too much slippage. So we often see brown doing more when we are seeing price up against blocks of liquidity, right? So right now you see this block of 50 million right here. They could, this is typically, and we're almost to that level. This is typically when we see brown making market orders. And important to remember that these are market orders. Market orders are what move price, right? And so it's going to take a lot to cut through this block here. Is Brown going to make a $50 million market order? No, they are not. But if they can get some cooperation from the other order classes, then we might see a unified front to push towards this and try and cut through it. But right now, it looks like it's been reinforced a bit. So we'll have to watch and see if this erodes, or if it or if they replenish it. Right now, looks like mostly selling happening here. Is purple buying a little bit? Let's go into the daily and see what's going on here. So purple is actually...
You're not sharing your screen anymore, Keith, just so you know.
Well, let's try that again.
We were following along while you were talking, but
okay.
Now that we're going to actually start referring to it again. And then because you had said that this moves price, I also brought up a question from somebody who's tuned into the call.
Okay. So the market orders move price, but the liquidity herding, as I like to call it, influences that sentiment, right? So you see here a block of bid liquidity that moved up from the 85K range up to the 86K range. And you see another another block of bids above that, and a little bit more here and a little bit more here. So this serves as support and backstops and gives the market confidence to buy at these levels. But it is the actual market orders that move the price. And right now, purple is the only one that has been buying in this range, and we'll see if brown steps in and makes a big order that helps us get through this. When brown and purple are unified, price tends to move, and the other order classes tend to follow. So that's what I'm watching here.
Awesome. Thank you. Okay, then let's go to this question then by one of our viewers.
Okay.
Captain Laser Eyes said earlier in the call, you think the market moves by DeepSeek published tariffs or even inflation rates? I don't think so. I wanted
Do you
to
think
bring
the
this up
market
because-
moves from tariffs and inflation rates? I think that influences sentiment. Okay, so yes, that influences sentiment 100%. But the mechanics of what moves price in the order book, the mechanics of what moves price in the charts, is a market order, right? Market order has to cut through ask liquidity, but things like tariffs and inflation and other economic data influence the market sentiment. So somebody asked me the other day, why is the S&P, Bitcoin's not supposed to trade like the S&P, but it still does. Why is it doing that? Well, at this stage, as crypto has matured over the years, we have a lot more institutional and TradFi participation in the crypto market, right? Is that a safe bet we can all agree on? So what is one of the biggest, one of the really the underlying rules of trading is it a risk on or risk off environment? And when we're seeing uncertainty in the market based on economic indicators, based on the uncertainty around tariffs, those create a risk off environment. And that's why we've seen that, coupled with prices at highs or near all-time highs, is what has triggered the selling. So yes, that is, I guess, causal. Would that make sense? Right? That influences sentiment. That's the reason that people chose to sell. But it is the actual, we say market orders move price up, but they also move price down, right? So when people sell more in market orders than there are limit orders resting, then price punches through that, and then we see price go down. So it's an interesting cycle.
I think one of the things that's worth recognizing is that you literally can't, like by definition, you can't separate inflation from market prices, because you sort of use market data to even measure inflation in the first place. Like these things are at least partly, inseparable. It's not you cannot say definitively that inflation is, for example, the sole reason for Bitcoin price to move. Obviously, that's not true. But a bet on the price of Bitcoin continuing up over time is one of the ways that you would measure inflation in the U.S. dollar, right? Inflation is kind of defined as being the change in spending power or the change in buying power of a fiat currency. And so when the prices of things are going up, whether that be, consumables like eggs and milk and bread, or, fresh fruit, or, commodities. If you class Bitcoin as a commodity, it doesn't really matter. But yeah, when the prices of things are going up, that is that is one of the things that we use to define what the inflation rate actually is. And it's interesting that we still go through deflationary cycles in the US dollar, despite the fact that that its supply is continuously increasing. So when the prices of things start coming down, and again, this can be consumer appliances like televisions or new cars or refrigerators or whatever. But when those things get cheaper, you're actually measuring deflation in the US dollar. these are all part of the same, the same prism. You cannot separate them. So to say that the market moves by inflation rates is kind of a misnomer. It's more like you determine inflation rates from how markets move, and it's not a simple function, but that is one of the things that we do. I'm not sure what DeepSeek publish means. I know that DeepSeek is the Chinese competitor to ChatGPT, or OpenAI. I publish, I guess, meaning that if they're publishing new results or something and that's scaring investors. I do think that that's a possibility. And tariffs absolutely affect, the not just market sentiment, but the literal price of stuff. When tariffs are coming out, the amount of disposable capital that people have for savings or investment is going to go down. Everything else left the same.
But it's also, and at this stage, so you're absolutely right about that. But at this stage, it's also speculation about tariffs, right? Trump says tariffs are going to start on April 2nd,
Absolutely,
the market reacts. And then the other day he says, "Well, there's some flexibility on the tariffs," and the market reacts. So if anybody hasn't figured out yet, this is a negotiating tactic that the administration is using. Yes, there will be tariffs. Yes, I do believe that he is going to level the playing field and reciprocal tariffs just to level things out. Now, if he starts matching other countries that are applying tariffs to the U.S. and they're dollar for dollar tariffs or percent to percent tariffs, then they might both go away, right? Who knows? But in terms of the crazy things that I call them crazy, but the wild things that he's saying in terms of what tariffs could be, and the literally negotiating in public how he's going to do these. This is unprecedented, right? This hasn't happened in any other administration that I can remember where, I mean, it was really done in.
Did we lose him? Not just
I
me.
think so. He said he was
back.
running on battery power, so
I'm back.
It could be that.
Oh, he's back. There he is.
I'm
Okay.
back. Yeah, I'm running on battery power, and I'm tethered. My internet connection is tethered to my phone with 1 bar. So all things considered, I'm doing great. So that part is unprecedented, but it is I think something that over time is going to stabilize, and the market's going to normalize to it.
This new comment, I'm trying to interpret it. I think these lows, I think it's meant to be lows, are pre-decided to keep the crypto price down and avoid any supply shock. I think that's supposed to be.
Mm-hmm.
I'm not entirely, I'm not certain what that assertion means, but the theme of it is that there is someone somewhere that has predetermined what the markets are going to look like, and to some extent that's at least partly true. Like, and you've heard Keith and
we
I
illustrated
talk
it, right? We showed somebody suppressing price 100%, right? Now,
and
who is it?
It's not just true. It's not just true in Bitcoin either. I think precious metal markets, for example, have had a huge amount of price manipulation over the last decade, especially. And it's usually like price suppression is very common especially in gold, but also in silver. And you see a lot of people speculating on the reasons for this and the repatriation of gold by central banks across Europe and that sort of thing. So yeah, like asserting that there is some authority that doesn't necessarily have your best interests at heart, that has let's say an enormous influence over how the market behaves, is not so outlandish. I think that there's some wisdom to that, but I don't think that it's necessarily pre-decided to avoid things like supply shocks. And again, I'm not sure what supply shock here means. That could be, in terms of the monetary supply, or it could be in terms of the supply of Bitcoin.
Yeah,
And,
I'm a little confused by the supply shock part of it, because I'm not really sure how that impacts the price suppression, right? I don't think the price suppression
correct.
is necessarily related to supply shock as it could be. I mean, we could speculate on who Spoofy the Whale is, right? I'm not sure that that's a great exercise, that there's a lot of value in that exercise, but let's say it is.
I lost him again.
That one bar letting us down again. But
You
yeah,
were close.
I think that it's also important to recognize that there's probably more than one. Like we shouldn't ever make the mistake of thinking that there is like one Illuminati that kind of agrees on what the outcome for a particular market cycle should hold. In reality, I think that there are several, and they don't necessarily agree with each other. And so it's really those entities, whoever they are, battling each other, for dominance, or for influence over, any particular asset. It doesn't have to be Bitcoin. And the best thing that you can do as a trader is try to understand what they're doing, and to swim with those whales is usually how I think Keith phrases it. But yeah, it is naive to think that there is such thing as like an organic market or an entirely organic market. I think in the fine structure of any of these price charts, we do see true organic, like retail reactions, investor reactions, and that sort of thing. But the macro is absolutely in the hands of a very small number of enormously powerful institutions. And yeah, they won't necessarily be agreeing with each other. So if the assertion is that these lows are hard coded in by someone, that might be true. But remember that whoever it is that you're asserting is doing that is also contending with others that have equal influence, who may have a different idea of where those lows should be, or where the highs should be, or whatever. So yeah, it's an interesting point, and I think the ambiguity that you expressed it with has actually been helpful in exploring some of these topics. So I thank the user for their comment.
Thank you, Captain Laser Eyes. Mark, I was going to actually ask you, and maybe it might be better suited for Keith. I don't know. But in the beginning, did you notice how he was saying that Spoofy the Whale could have been placing their orders, or their liquidity to maybe suppress price a little bit to protect some shorts, right? And then all of a sudden we see this large amount of liquidity. I forget the exact number that Keith had said. That could possibly also be for longs then, in that same sense, no?
Yeah, absolutely.
Is it?
And so this is,
It's not
using the
necessarily working against each other either, these large entities. They could be working together in that sense as well. Otherwise, we
plus.
might actually, or they're responsible for both. Otherwise, we could see the opposite just as much as, we're seeing what we're seeing in the order book right now.
Right, and there's nothing malicious about protecting a short by having a sell wall somewhere. And so let's explore that idea, because people do this all the time, and it's usually actually encouraged. So when someone, for example, wants to take a leveraged, let's say a leveraged short position on Bitcoin, there are a couple of ways that you might hedge that position. And one way to do it is to actually take a leveraged long from the same position, basically bet against yourself. And there are very specific methods that you can use to calculate the exact risk parameter that you're willing to tolerate, and then execute the trade that way. And so if someone is doing this with size, the issue is that you're no longer a passive participant in that marketplace, but actually become its determining factor. And that, for one, means that you can have an undue influence over the markets that you're participating in. And this is when, regulatory agencies become very interested in what you're doing. There have been examples in the past where, people have made accidents while doing this kind of stuff. There was a famous oil futures fiasco where some drunk trader accidentally placed something like 250 million, an order for 250 million barrels of oil instead of $250 million worth of oil, which completely, which I think moved the price far enough that they, inadvertently liquidated, a lot of positions. And I think it was the British regulator that eventually came after that person and removed their permissions to trade oil futures. But that's an example of where someone trading with size determines the market rather than them interacting with it. And the same is certainly true of Bitcoin, except that no one's regulating it. And so people who would you may like to recreate that exact oil futures trade, but can't because there are regulatory agencies that say you're not allowed to do that. In Bitcoin, those regulatory agencies basically leave you alone. And so if you wanted to create a huge short position and then create a sell wall so large that no one can surmount it, in order to to guarantee that your short cannot be liquidated, then that's actually a flexibility that you have in cryptocurrency that you don't in other markets. And so we should expect that people are going to do that. And because it's not regulated, by definition, it's not illegal. Like, this isn't malicious. That's just a slightly different rule book. But the days may be numbered where that kind of behavior is tolerated. As this stuff moves towards, as the entire asset class moves towards a more regulated environment, we may see this kind of activity start to bleed out. But I don't think that's going to happen anytime soon.
Thank you for sharing your thoughts on that also. I want to, and if Keith comes back, we can kind of revisit that a little bit, I asked in the beginning if there was anything specific that you might have been looking at. And I know we were going over the fire charts and things with Keith. Last week, you had pointed out the trading Bitcoin versus gold. What this actually looked like. And we ran a simulation using Carbon DeFi. I believe it was for 6 or 7 months, and it was 25%.
Hi, I'm Sarah Koenig.
Sorry,
This is one ring.
Sorry about that.
I remembered our intro to the call. I thought that from there we were going to be good. And now we've each had our own issues on our end. So this is actually kind of like group effort here. Okay, so it showed a 25% ROI when trading Bitcoin versus gold in that 7-month period, right? That was interesting. Was there anything else? And I think this is kind of something that we were talking about with Carbon DeFi, is that you're not limited to specific pairs, right? That you can actually create your own pairs. So anything that you want to share with us this week, or any thoughts that you might be having, just in regards to on-chain trading specifically now?
Well, because of how interested people were. So the case that I was making for comparing or doing charting on Bitcoin with respect to gold is that in general the Bitcoin community isn't really interested in dollars, and so it's weird that you would measure the value of the thing that you like relative to the thing that you're not interested in. Like, why do you care if the price of Bitcoin is $100,000 if you have absolutely no ambition to exchange it back to dollars ever again? And a lot of people share that, that philosophy that they are abandoning, their government's fiat currency. Not all, mind you, but it's certainly a prevailing paradigm within those communities. And I think that it's not limited just to Bitcoin. So because people are so interested in the Bitcoin gold chart, I thought it might be fun to have a look at, what some of the altcoins are doing with respect to gold as well. So just for posterity, this is the Litecoin chart. And Litecoin has been going through this symmetrical triangle sort of shape for a really, really long time. So this is going back all the way to 2017, and it's basically moving in this direction. And if you then convert it to the price versus gold, you get a slightly different perspective, right? So you'll recall when we were looking just at the US dollar, it was symmetrical. But when you convert it to the price versus gold, you see instead that this is actually a descending wedge, right, or a descending triangle. So you can see that the the support line, and again, I draw my lines in a very sort of slapstick kind of way, which is fine, that suits me. But if you have a look at where these candle bodies are actually resting on relative to gold, it actually does give you a much more easily identifiable support level that you can trade more easily, right? Because these kind of sloping lines are more difficult to set up typical strategies with. And this isn't, this kind of, change in the pattern when you're valuing cryptocurrencies that you may be interested in versus a more formidable source of value like gold, you do start to get a different understanding of how that, how the price structure is set up. So really, for Litecoin, you could say that there is a very strong historical support level at 0.02 ounces of gold that it has been respecting, since it checked it for support back in November of 2018. And then, checked it for support a whole bunch of times between March of 2020 up to October of 2020, again in July of 2022, and then September to November of 2024. And then there is this, descending resistance line that, it only just recently touched back in December of last year. And so, if this pattern was to repeat, we should expect that the price of Litecoin versus gold to drop, right? Another about 23.9% before rallying up and maybe finally decisively breaking out of this pattern. And it's not just Litecoin, right? So we can do this with basically any any meaningful currency that we like, or any
Hey,
any
Mark,
altcoin that we want.
Mark,
Yeah.
I'm back. I gave the greatest analysis that nobody heard when I realized.
Oh no.
I answered all the questions. I'm fascinated by this chart against gold, and I'm wondering if you think that at some point in time we might start to see that as actually a pairing that's offered. I don't know any place. Maybe you do. I don't know any place or any exchanges. Certainly, no centralized exchanges that are offering that. Is that something that's where gold could be the base currency?
Well, the way that conventional exchange infrastructure is set up in places like Binance and Coinbase and so on, is that there is kind of a mandated numeraire, right? So this is the reason for Bittrex to invent USDT in the beginning, because it kind of simplified their exchange processes, but then had other applications as well. And so, for an entire exchange, generally you're forced to use whatever it is that they prescribe. You could have an exchange that says we require that everyone trade in gold versus these things. But I think that comes with other issues. One is that, especially in the United States, it's illegal to offer securities and commodities on the same exchange. And so pairing gold with something like, stocks or whatever, would actually be, is required to be separated, so that, an exchange trying to do that wouldn't be allowed to. But the value is that, in DeFi is that you can set these things up, and because there's no central, clearinghouse or anything, the same regulations don't necessarily apply. And so we do have an exchange. It's called Carbon DeFi, where you can pair, you can use whatever numeraire you want. And Pax Gold is my preferred tokenized gold asset on Ethereum.
So
You can
you're
pair that
trading
with-
you're trading against gold on carbon at this point?
I have previously. I have previously traded stuff versus Pax Gold, not on Carbon DeFi yet. But I'm now returning to it because it looks like the price of gold is going to get a little interesting, right? We recently broke into the $3,000 territory definitively, right? Like it's already checked it for support, and it seems relatively strong.
But you're
And so,
trading
yeah.
against a synthetic product or against gold as a commodity?
Gold is a commodity. So the way that the Pax Gold instrument is set up is that it's actually there is even a redemption process for those tokens if you want them. So it's similar to buying into a pooled gold. A pool gold instrument for people that are familiar with that. If you don't actually want to accept delivery on gold, and there are so many reasons why people don't want to accept delivery, because it's heavy, it's difficult to transport, and expensive to transport. It's difficult to and if you are a known gold bug, it may precipitate unwanted attention from criminals who want to come in and find your gold stash. So people will instead buy like a receipt that has an equivalent gold backing, and this is one of the things that has sort of surfaced over the last 6 months, is that some of those receipts may actually point to gold reserves that don't actually exist. And this is why Donald Trump and Elon Musk are investigating Fort Knox. This may have something to do with the fact, why so many countries are repatriating their gold from London and from the US. There seems to be more gold traded than exists, which is a terrifying realization to have. But Pax Gold,
well, they did it with fiat, so why not do it with gold?
Well, exactly. And this is a lot of people have been pointing to it as evidence for price suppression in the gold markets, and it's not entirely clear why anyone would be suppressing the price of gold, but there are a lot of theories. But yeah, coming back to my point, Pax Gold, the token PAXG, is a fully one-to-one collateralized version of gold. There is a literal vault with attestations and audits and so on, and they have to hold themselves to a relatively high bar because of the cryptocurrency component. So they're very much under the microscope in a way that central banks managing gold reserves haven't been. And so, yeah, it's, in my opinion, Pax Gold is actually a slightly better, option to buying into pooled gold than traditional instruments are, just because of the lack of accountability there.
That's interesting. I'm intrigued by this, and I apologize. I was in and out. I now have power back, and now the internet is intermittent. But
I was
joking. We all had our own issues. Mark, you have 2 minutes, just so you know. So
keep it quick.
demonstrate it, because I know that you need to drop. And Keith, no worries at all. We're glad you're able to rejoin.
Just about to demonstrate that when you measure XRP versus gold, and so I should maybe go back to the XRP USD chart first, where we had this, what I consider to be another symmetrical triangle, and then a very strong break to the upside. And when you do it versus gold, and again, I'm fairly inconsistent with how I draw my lines here, that it has much more of an oscillator pattern than I think it does versus USD. Now, again, I concede that seems a bit disingenuous, because I could very easily draw this sloping support line here, and a descending sort of support line here, and if we really wanted to, we could get that same triangle back. But just eyeballing it, right, it does look like there's much more of a horizontal support line here, especially. Yeah. And so XRP as an oscillator versus gold is actually an interesting, represents an interesting trading opportunity. There are a bunch of these, and people in the precious metal space are familiar with them. So, for example, things like palladium and rhodium are often traded against each other in oscillation because they can be substituted for each other in a lot of different industrial applications. Not all of them, mind you, but enough of them that when the price of palladium is getting too high, people will instead, start buying rhodium as a substitute, and that forces the price of rhodium up until people say, hey, maybe we'll switch back to palladium and things. So this is kind of arms race in the industry as to which one of these resources is going to be, adopted for, the consumables required to support that business for the next few years. And so people do trade these oscillators, and there's a bunch of them. Platinum, palladium is one, palladium, rhodium is one. And silver and gold used to be one, although it's much less of an oscillator these days than it used to be. But turns out a lot of these altcoins, and Bitcoin included, have these kinds of oscillating patterns versus each other when you know what to look for. And so, yeah, it is interesting. I have enjoyed exploring the price charts of gold versus these other tokens since last week when I sort of first presented it, and I'm glad that our audience is receptive to that idea.
Well, it's an interesting idea that you don't, it's the first time that I had really heard, and it was like I was saying, I was writing in it. Normally we hear the comparison, which is the better, asset, which is the better investment. It's either Bitcoin or it's gold. It's not very often that we look at, okay, how can we trade them against each other and actually create a profitable strategy, without even forcing it. It was really like, it was using historic data that we were able to come to that conclusion.
Yeah.
So,
and, like a lot of the stuff that you would do in technical analysis, like is immediately transferable when you change the numeraire from US dollars to gold. So for example, one of the things that Keith was pointing at when he was speaking was that there does seem to be this level that if Bitcoin loses that support level, we're probably headed a lot lower. And I think that number was somewhere around 76,000 US dollars, which just so happens to coincide quite well with the 50 EMA and the 50 SMA. And unlike Keith, I don't necessarily prefer one of these versus the other. I'd like to use both of them to kind of give me like an error bar. But I think both are useful in their own regard.
Yeah, and they're both pretty close. At least on the 50-week, they're both pretty close. The EMA is almost right on the line, and the SMA is right on the line, and the EMA is a little bit higher. But those are certainly things to keep an eye on. I've just over the years, to be honest with you, some of this may have been due to my lack of knowledge when I first started trading. I loaded the SMA, and it has served me well. Right. It's and especially that 21, something about that 21 day and 21 week that I really like. That one's really, really done well for me. And so I stick with what I'm comfortable with. And I would encourage every other trader out there not to do what you hear somebody else doing just because somebody you respect does it. I would say do what you're comfortable with. I mean, I will tell you that one of my mentors, one of my trading mentors, who I respect immensely, but none of us get it right all the time, and we have contradicted each other on our analysis here for the past year or so, and so you cannot follow anybody blindly. You have to learn from, there's a lot of resources out there. Some are good, some are not so good. Okay. You have to be able to filter through the bullshit and take what you can, take the value you can from everything that you're hearing or learning, tune out the noise, find the alpha, and apply what works for you. Don't do anything, no wholesale moves based on what anybody else said or does, myself included. Figure out what makes sense to you, what you understand, and use what works for you.
And bringing it full circle, just because there's a trading, like there's an opportunity and you can see it, doesn't mean you necessarily need to be trading it either.
No, over trading is probably one of the biggest mistakes people make. It's how you know, and revenge trading, right? You lost a trade and you're like, fuck it, I'm going to make that money back. And you ape into, you're like, oh, it's going to support, it's going to recover. And then, you know, you buy and then it dumps, you know, 15%.
Yeah. 15% if you're lucky. I don't know. You don't DeFi. I can tell. Well, awesome. Thank you guys so much for joining. I know that we had some, you know, issues, whether it was my landscapers or, you know, internet issues or whatever it happened to be, but I appreciate the audience, all of our viewers sticking with us
We
throughout that.
overcame all of the challenges.
We did. Yes. And I appreciate you guys always. So thank you so much. And thank you to everybody who was adding their comments and their thoughts and questions here as well this week. I hope everyone has a wonderful week. Keith, I think you always say safe trading. I think that's kind of your sign off. I won't steal it. I'm going to just quote you just for today. So.
Trade safe, my friends.
Awesome. Thanks, guys. We'll see you next week.
Thank you. You guys have a great trip.
Thank you so much. We'll talk to you soon.
All right. Bye.
See ya.